The other big, once upon a time unicorn. Now it's like a big time unicorn. But one of the first unicorns, Uber, set to report its fourth quarter results tonight after the bell. Competition and cost will be, of course, a focus for the company as it looks to achieve profitability. Joining us right now is Masha Kahn, a senior equity analyst at HSBC. So, what are you looking for this afternoon?
I'm looking for Uber to talk about their cost leverage.
Right.
I'd like to see more cost focus from the management team. And I'd like to hear their comments around how much the price adjustments they put through in the fourth quarter had an impact on demand. Our theory is that demand for Uber is relatively inelastic, and we should start seeing inelastic, and should start seeing that in the fourth quarter.
And what's your price target for the company right now?
It's $46,
and that's
20% upside.
Based on the expectation of what's happening today?
Our price target is based on more longer-term view.
Right.
We think Uber gets to scale and starts becoming profitable in 2021. And we think there's going to be value unlocked for the Eats business. Right now, there is no value for the Eats business.
Let's talk about the Eats business for a second. What do you need to hear this afternoon on Eats?
I really want to hear a company talking about rationalization using M&A tool to rationalize their footprint. You know that more than 50% of their losses come from only 15% of their gross bookings. Right. So the losses are highly concentrated in a few geographies. Getting out of India could trim those losses by a third.
Well, that was my question, though. There's sort of it's a double-edged sword. There's part of me likes the idea, as I imagine you may like the idea, of getting out of unprofitable markets like India and other places. The flip side is, to the extent you ever thought that this was going to be one of these companies that was going to take over the world, right? That was the vision of all of this. That every time you say, you know what, India's out, China's out, that growth prospect in terms of what the ultimate vision of what that company can become is diminished, no?
To some extent, you're right, but we also think there are a lot more services that Uber can offer in the existing markets. A lot of the competitive dynamics are actually local, so dominating the market is much more important than conquering the world. Dominating one market and offering additional services aside from rides and eats, and maybe going into payments and maybe to some extent grocery.
Okay, how about just making money on the rides? I mean, you know, I think it was Jim. I don't want to speak for Jim Cramer, but a couple weeks ago, he had, you know, he's a funny guy. He had a funny tweet, and he had a picture of like Uber Eats bag, and he said, "Sell this stupid business and watch your stock go up," basically. Sounds like you would agree with Jim. That why not just focus on the core business, Masha, and make money when Andrew or yourself or anybody just gets in the car?
I agree to some of that. You know, rides business is profitable. It went from 8% margin to 22% margin in the last 2 quarters, and it's got more to go. I think in some of their top markets, they're seeing close to 60% margin, so there's no reason why it cannot get there. On the Eats side, there's been a lot of concerns around Eats, and we voice those concerns to some extent. But if losses can be eliminated by exiting through unprofitable markets and just keeping the markets where they're dominant among one or two players, that's key.
You want to go deep. I understand what you want to do. You want them to go deep in each particular market that they have access to. But the question I have about that, and really what I think you're doing is following what's really the model of what Grab has done, for example. This is in Southeast Asia. This is a company that, in the end, started out, you know, as effectively the Uber there, but now has financial services, payments. I mean, they have a whole... But they've become a super app.
But you can do that in Malaysia.
But you can do that because
the government sort of dictates.
Well, but also because there wasn't all of these other entrenched players along the way. So when you say that you want them to get into financial services and financial other products, that means that they're going to be competing against banks and Venmo and PayPal and everybody else, and whether they can actually do that.
Well, I'm not talking about U.S. I'm talking really about emerging markets.
Okay.
Brazil is their second largest market globally, right? And we're seeing a big growth in fintech in Brazil. PayPal is actually an investor in Uber, and they can partner with PayPal to penetrate, you know, financial services market in Latin America.
I don't want to put you on the spot, Masha. There was a rule, a law that got passed in California. I think you saw this, Andrew, which is Uber. They're just going to give you an estimate now on your ride, not like this will cost you $32. Like it'll cost you between $30 and $40, and drivers can basically change their mind, I mean, and not pick you up. No thanks. Is there any indication that that is hurting their business in California?
Well, first of all, California is relatively small in Uber's context. It's less than 10% of their ride-hailing global bookings, so it's relatively small. It's not the most profitable business for Uber either. I know they made changes through the app. We haven't seen any evidence in terms of what those changes led through, but I expect prices to go up over time in California, just
Masha,
like they did in New York.
Appreciate it. Nice to see you.
Thank you.